Aussie dollar daily forecast January 5th, FXEmpire.com. The Australian dollar pair fell originally during the Wednesday session as the risk off trade came back again. This makes perfect sense as the rally from Tuesday needed to be sold off as the markets are so volatile lately. The Aussie, of course, is very risk sensitive on the whole, and as the markets felt better about things in general during the US session, the Aussie did end up getting a bit of a bid before it was all said and done. The resulting candle is a hammer, and as you can see, it is starting to plow into an area that we have marked as resistance. The 104 to 105 area does look very resistive to us, so even though we have essentially what could be a buy signal at this point, it's very difficult to buy at these levels. We would need to see a daily close above 105 to be convinced going forward. In the meantime, we think the headlines will continue to pose quite a heavy risk to this pair, especially coming out of Europe, as the debt crisis just simply isn't getting any better. If we can break above 105, fine, we would be willing to buy on a daily close above that level. But in the meantime, we expect to see some kind of weakness. There is a gap down below that has yet to be filled, somewhere close to the 97 handle, and that is very rare. The breaking of the bottom of the Wednesday hammer would be a very bearish sign. Friday brings us the non-farm payroll report, and this pair generally will react quite violently to it if it's a shock. So there is a possibility we may see a very quiet session for Thursday in the Aussie as we wait for the non-farm payroll. The markets seem to anticipate a strong number out of the U.S. jobs market, so anything that is considered weak is more than likely going to move the markets pretty rapidly. The risk seems to be to the downside as far as that's concerned. So, in the meantime, we simply will wait for a break of the hammer to the downside in order to sell, or a daily close above 105 in order to buy.